Today, the S&P started out opening significantly higher than yesterday's close. Thought it was going to be a pretty good day, or at least was hoping it was going to be a good day, but it's just slowly been going down for the vast majority of the day, and nearly every single stock that I have has been going down along with it. And today's downturn, combined with yesterday's downturn, we have a few more stocks that have hit their sell triggers. So we've got some possible sells. And the first stock we're going to look at is Amazon, AMZN. Right now we have 3 shares of Amazon. In each share, I purchased for more than $237. And right now, we definitely have a continuation of our price that crossed below both our fast-moving average and our slow-moving average yesterday. Price is currently lower than the close of yesterday. Now, I will be setting a sell order for 2 of those shares of Amazon. So we'll come over here to our watch list, right-click, hit our sell. We're looking to sell 1 share, and I bought 1 Amazon at $237.79. So we're going to take 10% of the 200s place, which is 20 cents, and add 20 cents to the 79, which is $237.99. $237.99. Good till cancel, extended hours. And we're going to go right in and hit another one. Get our sell order. We're selling 1. And the next one I bought at $237.92. So again, we're going to take 10% of our 200s place, which is 20 cents. And that's going to be $238.12 is our sell order. $238.12. Good till cancel, extended hours, confirm, and send. So there's our 2 sell orders. We've got 1 more share. If the fast-moving average crosses below the slow-moving average, and the day after that, there's a continuation down, we will set a sell order for that 3rd one. Our next stock that we're going to take a look at is Goldman Sachs. All right, Goldman Sachs. Now with Goldman Sachs, we have the same situation. We have 3 shares, and all 3 shares I purchased at a higher price than what the current price is. And we had continuation from yesterday's cross below both the fast and slow moving averages. They're definitely have a continuation. We already have 1 sell order, so we're going to set 1 more sell order for Goldman Sachs. Come down here in our watch list, right click and hit sell, and this will be the last sell order that I put up on video. If there are any remaining sell orders that I need to put up for possible sells, I will do that off video to save time. I'm more interested in showing you the process in which I decide to either sell or buy any particular stock. I think that's far more important than just showing videos of me putting up sell orders. So this will be the last one on video. All right, the least expensive stock for Goldman Sachs is $7.36 So we'll take 10% of the 7s place, which is 70 cents, and we'll add that to our purchase price of $736.03, which is $736.73. So $736.73 is our sell order for that share of Goldman Sachs. And just like the previous stock, if we have the fast-moving average cross below the slow-moving average, and then we have continuation the day after that cross, we'll put up a sell order for that last share. All right, so moving on to MA, which is MasterCard. All right, MasterCard. Yesterday we had price cross below our fast-moving average. We have continuation down today, so we're going to be selling 1 share. I currently have 4 shares in MasterCard. I buy 1 share per book, so we'll confirm we've got 1 share in the quantity order, and now we'll come down to $591.60 in our active trader, and we sold that at $591.60. Now, I bought 4 shares prior to transferring all the funds from my old account to this account. I had purchased 4 shares at $568. And since I've opened this account, I've been day trading 1 share of MasterCard. And that is what this sell order is. This sell order is for my day trading strategy. So I now have 2 shares that if this price continues to fall, if in a few days or tomorrow or whenever if price does happen to fall below the slow moving average, and then the following day we have continuation, we'll be selling an additional MasterCard. Next on our list is 3M, MMM, and what do we have? We have price opened up lower yesterday than both our fast and our slow moving averages, and we have continuation down on both of these price alerts, sell alerts. I currently have 7 shares. We sold some 3M yesterday. We sold 2 shares for $154.42, which we made a small profit on those. So I should have 3 books with 2 shares each, with a total of 6 shares, but I accidentally bought an additional share. So I'm going to set a sell order for 2 additional shares and a sell order for the additional 1 share that I accidentally purchased a while back. Again, I'm going to do that off video. All right, so here are the 2 sell orders I have for the 3 shares, and here you can see this is the day I bought on August 21st. I actually bought 3 shares when I only should have purchased 2. All right, next on our list is Marriott, MAR. We had price cross on Friday below our fast moving average. We certainly had continuation of that cross, but not only did we have a continuation of the price falling below our fast moving average, it opened up lower than our slow moving average. So that was a continuation yesterday, and I did set a sell order for one of the shares. We currently have 2 shares. That's 1 share for each book, so we have 2 books with 1 share each. Now today, we do not have a continuation of price moving below our slow moving average. We have price moving higher, and price is currently higher than the opening of yesterday's candle. So we will not be setting a sell order for Marriott. We'll just leave this one in place. We'll move to our next one, which is PayPal, PYPL. So we had price yesterday open below both our averages. It opened below our fast moving average and our slow moving average. However, it moved up yesterday, and we still have price. It opened up lower again, but it's moving up again today. So we do not have price continuation of this move down. So we will not be setting any sell orders for PayPal. Now I currently have 4 shares, and each book has 2 shares each. So right now I only have 2 books worth of PayPal stock. All right, moving on to Sherwin-Williams. All right, so Sherwin-Williams. All right, you can see Friday we sold 1 share. We currently have 3 books with 1 share each of Sherwin-Williams. We sold one back on Friday. We had a continuation down from this cross of the fast moving average. Yesterday we had price move below our slow moving average. We had price opening below, so that opening was actually a continuation down. However, we have price moving back up, and since our price is higher than both of our open and our close yesterday on this candle, this is not a true continuation, so we will not be setting any sell orders for Sherwin-Williams. And of the 3 shares that I currently own, I have 1 that I purchased at $351.11. The other 2 are priced higher than the current price we have right now. So if tomorrow we have continuation down, hopefully it won't fall below our 351. Hopefully there won't be a drastic move. And if it does move, we'll sell at a small profit tomorrow. But for now, we've got everything telling us that it's time to move on to the next stock to look at, which is an ETF, SPXL, which is a triple levered ETF to the S&P 500. Same situation, even though we had price open yesterday, crossed both below the fast moving average and the fast moving average. We have price opened up higher, even though it is moving down the day. This is not a true continuation down from the original move yesterday. Now we're currently maxed out with 3 shares for each book of 4 books, so we have 12 shares of stock. We have a sell order. These bubbles, these indicate that this is also a stock that I day trade, and we currently have a stock that we weren't unable to sell at a profit before price moved down on us. So for this stock, we will wait until tomorrow. We'll look at that tomorrow and see what information is given us on the screen. So the next stock that we're going to take a look at is Verizon, VZ. This one's been in a downward trend for, this is 1, 2, 3, 4, 5, 6, for 7 days now. We were able to sell 4 of the shares. We typically have 4 shares for each book. So when we're maxed out, we have 16 shares. And these 4 shares were sold, part of the continuation of this cross. We had a continuation of price moving below our slow moving average. We had a price trigger when price moved below our slow moving average, and we have continuation today of the downward move. So I'll set a sell order for 4 shares off video. All right, the last one we're going to look at is an ETF, UDOW. It's an ETF that tracks the Dow Jones Industrial Average. We had price cross yesterday below our fast moving average. We do have continuation down from that cross. So our current price is sitting at $99.27, and that is lower than all, well, 6 remaining shares. That's lower than the price of my purchase. The lowest purchase price I have is for $99.53. So I will set a sell order for that. Well, at least for those 2 particular shares that I bought for $99.53. I'll do that off video. All right, you can see I accidentally sold 2 shares at $99.34. I set my price, or at least I thought I set my price for 9 cents higher than the 53 cents. So I thought I set my sell order for $99.62. However, it sold for $99.34. So that's actually going to be one of the rare losses that I have in my realized losses and my trading activities. So that is a 30-cent loss that I'm going to take on those. All right, so that is everything that was on our sell list. Now we're going to take a look at our buy lists. Oh wait, no, we have 3 stocks that are going to earnings this afternoon. They have an earnings release, their earnings reports, and the first one is AI. Just C3 AI. Now I currently own 6 shares, and all 6 shares already have a sell order that was placed way back here on August 27th. And that is what? Back here. So when we had continuation of this price cross is when we set our sell order. Now when I have stocks that go to earnings, I want to try to at least have half of the shares that I actually own available in case price spikes up and continues up. So we're going to cancel this. We're going to cancel these 6 shares, that specific sell order, and we are going to reset another sell order. Actually, we will not be setting a sell order because my AI, when I maxed out with my 4 books, that's 6 shares per book for a total of 24. So this is already 1 book. So we're just going to leave that canceled and move on to the next stock that we have earnings report this afternoon, which is Salesforce, which is CRM. And we currently have 5 shares. All of these have sell orders on them. So we're going to cancel 3 of the existing sell orders. We're going to cancel the 3 highest sell orders. So let's go ahead and do that now. We're going to cancel, that's 347. All right, we're going to cancel the 364.66. Come back in, and we're going to cancel the 363.48. And we're going to cancel the 347.94. So we have 2 shares of Salesforce in case Salesforce has bad earnings, but if it spikes up before a downward move, which is common when stocks go to earnings, let's see what our sales orders are set for. They're set for 333.42 and 347. It's highly unlikely that Salesforce is going to jump $80. It's not unheard of. It's uncommon. It's not rare though for a stock to move $80 to $100, especially a stock like Salesforce. But that type of move is typically if we have an upward move. It's rare that it'll jump up $80 before it heads on a downward move. But if we look at, let's take a look at MongoDB. MongoDB the other day, on their earnings, they went from 220 and they went all the way up We'll just call it $280 there. So that was a $60 move. However, that was a continuation of a move up. It wasn't a spike before it headed down. So going back to Salesforce, which is CRM, we've got our 2 shares, and we'll find out this afternoon which direction this moves. All right, the last stock going to earnings this afternoon is Hewlett Packard, which is HPE. And I currently have 20 shares. When I'm maxed out, I like to have 5 shares per book. So for the 4 books, that would be a total of 25 shares. No, my math was wrong. So it's 4 books, 5 share seats, total 20. Now all 20 shares were purchased higher than the current price. So I'm going to set a sell order for 10 shares in case we have price move upward before it moves back down, if it indeed does take a downward move this afternoon. All right, so here's our sell order for 10 shares. And if Hewlett Packard does overall make a downward move today from their earnings statement, it's possible that it might spike up and capture these shares, and we'll get that money back into our bank to have a little bit more money by stocks that are more in an upward trend. HPE, of course, clearly is in an upward trend here. However, I've been holding on to these 20 shares of HPE since back in February or January. We had the Donald Trump announced his tariffs, and of course, if you're in the markets, you know that it went down drastically, partly through April and most of June. So we're hoping, or at least I'm hoping, that we can get some good news on these earnings and price continues to move up. So that is all of the stocks that hit our sell triggers and going to earnings this afternoon. So we'll move on to our buy list. And the first stock we're going to look at on our buy list is CLS, which is Celestica. Celestica is a Canadian-based company that provides product design and manufacturing for supply chain of electronics and electronic equipment. All right, so yesterday, we had a cross yesterday of our fast-moving average above our slow-moving average, and we have price continuation today of that. Now, typically, when we have a cross of our fast-moving average or the slow-moving average, I like to max out. That's when I like to make sure I have all of the books that I can purchase available. And with CLS, I would be maxed out at 16 shares. However, I'm concerned, after we've had a long run like this, I'm concerned that buying, going full, all as far in as I can get and max out all of my books, that it might not be the best opportunity for price movement that will result in profits. So let's take a look at our monthly chart. So if you take a look, you'll see we are a pretty good distance away from our fast moving average, which is common. Stocks typically do this. They'll move a nice distance away, but at some point they like to pull back. Like here, we've got a pretty good distance away from our fast moving average and it pulled back. So I'm going to pass on CLS right now for 2 reasons. One, we have a few more stocks. 1, 2, 3, 4, 5, 6. We have 7 more stocks to look at, and they may be better opportunities. They may have just crossed after being down. They may have just crossed, and that would be a better opportunity to go in possibly for those stocks. And maybe it might be better to wait and see if this does turn around, and then we can buy back in at a better price. So we're going to hold off on CLS and move to gold. GLD. Here you can see with gold on the monthly chart, price can move away a significant distance and it likes to pull back. Pulled away a considerable distance away from the fast moving average, and it slowly, we had a consolidation here over 3 months, which slowly came back to the fast moving average, and it's taking off again. So let's go to our daily chart, 3 month and 1 day, and you can see it's got a nice run right here. And we had 4 shares, so we've caught a piece of this run. And not only have we caught a piece of this run with the 4 shares, I've been day trading gold recently, capturing additional gains along this move. Now we currently are down on this particular day trade. And when I do my day trading strategy for any particular stock, again, if you're new to my videos, this strategy that I show on my videos is a swing trading strategy where we try to buy in like at a cross, and we hope that the move lasts for a significant amount of time before we sell. If we're unable to sell at a profit, we hold on to our stocks until there's an opportunity to sell later. And the reason we hold is because I am not showing videos as a day trader. I'm showing videos as an investor, and I just happen to be swing trading my long-term holdings. And if you're new to my videos, what that means is the stocks that I'm showing on my videos are stocks that I plan on holding for years or decades. Now, most of the stocks I have, 3/4 of the stocks that I show in my videos are S&P 500 stocks, and there are very few stocks that stay down year after year after year in the S&P 500. So there might be an opportunity or there might be a time in which we hold on to a stock for not just weeks or months, but maybe a year or two. But ultimately, many of the stocks that are in the S&P 500 are also dividend-paying stocks. Now, for gold in particular, we were in a consolidation. We were in a 3-month consolidation. So this might actually be a breakout. If we go to a larger time frame, or at least a larger chart, we can see the year. It's still a daily candle. This is still a daily candle. However, we're looking at a year's worth of move. You can see right here, this consolidation. If I were to put a box here, we're going to add a drawing, we're going to add a box, and we're going to add a zone of consolidation. So here is a beautiful, it might actually be a beautiful breakout, and I'm thinking about buying maybe one additional share in case this is an actual breakout. If this is a breakout, we might see, so we went from 228 to 297, which is we'll just call it a $70 move. It's quite possible this breakout may move another $70. If this is the first time you've watched one of my videos, I've been trading for going on nearly 3 years now. And this strategy that I show in my videos. I've been using this strategy for a little over a year. So I'm still tweaking, I'm still improving my skill sets, and I'm still improving my strategy. So the strategy that I have is not a strategy that I'm going to hold on to indefinitely, especially as I learn how to be a better trader. And breakouts are certainly an opportunity to make a great deal of money. And a breakout is when any stock has been in a consolidating zone like this. This is one opportunity. There's pennant consolidations, there's flags, there's cup and handles, there's all types of opportunities in which there's a type of consolidation that price can break through an upper level of that consolidated zone, and then that's considered a breakout. And if this is a true breakout, this is an opportunity to make a great deal of money. So I might actually buy one additional share, but we'll see what other shares, what other stocks hit their possible sell triggers, or excuse me, purchase triggers, buy triggers. Now, another reason I'm thinking about buying additional gold, at least one additional share right now, and the reason that this might actually be a good breakout is that central banks around the world are buying gold at higher rates than ever. And for the first time since 1996, banks around the world hold more gold than U.S. treasuries. The dollar is losing power, and in that loss, banks want to reassure and hedge against any further devaluation of the U.S. dollar by owning gold. And again, banks hold more gold than they have since 1996, and this buying of gold around the world is probably not going to stop anytime soon. At least that's what experts are predicting. So that information, coupled with this 3-month consolidation, we might be at the beginning of a breakout. So if you're in the markets and you're watching my video, take a look at gold. Maybe you might want to purchase some. If you're not in the markets and you've been thinking about getting in, this might be a great opportunity to invest in some gold. That's not financial advice. I'm just giving you information, and I'm just stating aloud in my videos my thought process, and that is for you to use as you wish. But it is not financial information. I'm just a regular Joe trying to make money in the markets. So gold is a possibility. Let's see what other stocks we have. So Google has some great news today, and I'm glad that they were not broken up, and because they were not a monopoly for a year or so, or 2 years. They've been in the courts. Courts have been trying to break them up as a monopoly. My belief, just because you're a big company, that does not make you a monopoly. And the one thing that the courts found that possibly made the monopoly was that they were the sole provider of search engine for Apple. And that is one thing that the court said that they can't do. The courts did find that they were not a monopoly, but that one behavior made it questionable. So today, after that information was released yesterday, they've had a great move. They closed yesterday at 211 and they opened today at roughly 226. So they've had a $15 move. So we are currently maxed out, 1 share for each book of Google. And Google, like gold, I might buy 1 or 2 shares of additional stocks in Google. Google has not had a lot of move. It looks like they've had a good move, but compared to their peers, it's been at a much slower rate because they've been held up in the courts and the investors were concerned on what they would do. Now, a lot of investors wanted to pour a lot of money into Google if they were going to be broken up. Then they wouldn't know how the company would be broken up and how their monies would be affected. So now that that's past them, Google might actually, this, just like gold, this may be a breakout opportunity. So now we have a third stock that's on our list of possible additional purchases. And we have 5 more stocks to look at. Well, what I'm looking for is stocks that just crossed their slow moving average, like IBM here. So IBM has a cross. Their fast moving average crossed, we'll call it 3 days ago on Friday. However, we do not have price continuation going up. And we don't quite have the slow moving average curling up. It's not moving in an upward curl. It looks like it's slowing down, but it still is in a downward trend. So let's take a look at our monthly chart. And we have price below our fast moving average. So we are in so far, we're currently in a 2-month downward trend for IBM. This candle only accounts for today and yesterday. So 2 days do not make an entire month. So it's quite possible that this candle may end up turning red and moving down. So we will not be buying IBM. I like to buy. So when we have a cross, let's go back here. When we have a cross, I like to buy all of my books of stocks, all of the shares that I could purchase for a stock, along with when the candles are above the fast moving average. If I do buy any IBM, it will only be 1 book. That is all I will buy if I do buy today. So let's go back to our daily chart. That is a good signal though. We have the MACD moving up. However, both the signal line and the MACD line are below the midline of the histogram, which is not the greatest of indicators. We do have the RSI breaking back above and into the range, and it's no longer in oversold territory. However, it can easily go back. But we do have pretty good indicators letting us know as buyers that this might be a good opportunity. So if I do buy IBM, again, it'll only be 1 book. And for IBM, I buy 1 share per book. So let's take a look at our next stock, which is Johnson & Johnson, J&J. Here, what we're looking at, we already have 3 books. We sold, we had 4 for this run, and we sold at this cross. We sold right here. And the reason we sold here is because we had a cross here, but then we had price move back up, which was not a continuation down from this cross. The next day we had continuation down, but now we had a price alert triggered for a purchase possible purchase yesterday when price moved up above the fast moving average. However, we do not have a continuation in price moving upward. It moved back down today, so we will not be buying Johnson & Johnson. We'll take a look at that tomorrow. So Lowe's is the next one. Lowe's has been in a nice run. We currently do not own any Lowe's. And the reason we don't own any Lowe's is, looking at the monthly chart, we're still below. Our fast moving average is still below our slow moving average. Now this movement here is based largely on the idea that we're going to see interest rate reduction later this month. This is what investors are looking for. So there are plenty of investors, when they have a stock that price crosses down and they think it reaches a low, then they'll buy right back in. And this was a nice move. Went from 220 to 260. That's a $40 move that there are probably some investors that captured. But I try not to speculate. I try to purchase on information that's given me. I want to be as informed as I can be at this point. So what was triggered was yesterday we had price move above the fast moving average, and we have a continuation in that price. But since we have on the monthly candle, the fast moving average is below the slow moving average, I am not going to buy in. If I were to buy in, I would clearly be speculating on the possible price interest rate reduction later this month. And that I'll wait. I will wait. If we do get that rate reduction, then I'll buy in then. But for now, we're going to move on to the next stock, which is UI, Ubiquity. Here, we had on earnings, they smashed earnings. They had a heck of a surprise. If you look, you'll see that the estimates from the experts were $1.91 per share, and it was $3.54. So they more than doubled. They surpassed the earnings estimates by a huge amount. And that's why we have this move upward here. So I will be buying into Ubiquity. And currently, when I'm maxed out with my 4 books, it's 1 share per book. So that's 4. So we're going to buy 3, bump this up to 4. And we're going to buy, wait, I might not have enough money. That will take everything I have. So $540. Now so we'll hold off on Ubiquity. So now that's the 4th or 5th stock that we're holding off to see until I look at everything on the list. So the last one, this is the last stock that we had hit a sell trigger and sent us a buy trigger and sent us an alert. So XTL. So this has been in a slow, just grinding upward. XTL is for telecommunications. So we had yesterday, we had price move above the fast moving average. We did have a continuation at the open of price moving up, but we actually are now lower. The current price is lower than yesterday's close, so we don't have a true continuation. So I will not be buying any shares for the XTL, which I would have been purchasing too. So we'll take a look at that tomorrow, and if price is up, then maybe we'll purchase tomorrow. So that is all of the stocks on today's buy alerts. All right, so I'm going to go back to my gold, GLD. I'm going to give this some thought. So I will be back shortly with a decision on what I'm going to do about gold and Google. What I've decided to do, since I believe both gold and Google are sitting at breakouts, and if you're not familiar with what breakouts are, I try to keep my videos down to 30 minutes. Most of the time I'm right around 30 minutes. You can do some research on YouTube and find out how amazing breakouts, but for the short explanation, breakouts are one of the greatest opportunities. It is the greatest opportunity in investing that an investor can have, and maximizing the returns on their investments. Outside of investing in great companies, what we look for are breakouts, and I believe gold and Google is at a breakout point. So I want to capitalize that. So what I've decided to do is to double my shares per book. So instead of having 1 share per book for both gold and Google, I'm now going to have 2 shares per book. So I'm going to be buying 4 shares of gold right now. We're buying 4 shares of gold at $3.20. That price moved past me. at 328.20. So we got 4 shares of gold at 328.20. So now we'll take a look at Google. All right, so Google, GOOG. And I'm going to do the same. I'm going to buy 4 shares of Google at 230.17, hopefully. Nope, price already moved up a penny, so we'll go to 230.20. Oh, it's moved. There we go. So I got 4 shares of Google at 230.20. So, and there we have it. I just doubled my Google and my gold shares. You just witnessed a live tweaking adjustment of my strategy. That's the first time I've adjusted my strategy or increased my shares for purchase of any particular equity based on a possible breakout situation. And the difference in breakouts compared to a regular stock movement is a breakout can last several weeks and it can last several months. If you look at Meta 2 years ago, Meta moved more than a year. Meta broke out of $100 and it moved for a year and a half all the way up to 700. Not saying that Google's going to do that, not saying that gold is going to do that. But if it does, I'll continually tweak my strategy and possibly buy more of the shares as that moves upward. As that move upwards. If these two are breakouts, it'll be the first time I get to experience a breakout. So my fingers are crossed. I'm actually quite excited about the possibility of tweaking my strategy more for a breakout situation. And if any of you decide to possibly do the same, if you decide to buy any additional Google, or you're buying Google for the first time, or you want to buy any additional GLD, or you're buying it for the first time, make a comment. Let me know. We'll track this together. But for now, we are done for our triggers for both our selling and our purchasing. All right, it's now 3:54. I have the 3 stocks that we have going to earnings. Salesforce is reporting at 4 o'clock, Hewlett Packard at 4:05, and C3AI is reporting at 4:10. For me, I'll be coming back in about 5 minutes, but for you, it'll be just a few seconds, and we'll watch CRM, we'll watch Salesforce, and then we'll come back and we'll watch each one. I'll be back a minute or 30 seconds before each one reports the earnings. Okay, we're about 30 seconds roughly into our left before 4 o'clock, before end of day, and we'll see if Salesforce reports. Well, it wasn't 30 seconds, it was more like 10. Well, Salesforce hasn't reacted yet. Let's see if we do have a reaction. We've not gone into the 2 minutes into extended hours. Normally, we see a lot more activity when there's an earnings release. You know, oh, there's my timer that I had wrong. So we'll pause that for, all right, so here we are. All right, there we go. That's a pretty good jump. So maybe that's just a little tease there. What's going to happen? So I'm going to pause the video, and when we start seeing some candle movement, I'm going to come back in. All right, here we go. Looks like they've got their earnings released, and we've got some significant movement down. We already went from 258 to 244. Those are some day trades that I'll have to go back and purchase back into. So I will do that shortly, but for now, we're just watching the candle. AI's got some pre-earnings release movement already going on. So it is now 1 minute after 4. So I'll come back in just a few seconds, but it'll be 3.5 minutes for me. And we have roughly 30 seconds for Hewlett Packard. They've already had some investors are already predicting, and there's already been some price movement. 20 cents roughly. So we have roughly 15 seconds or less. You can already see Salesforce is moving back up. Hopefully that's a good sign, and it'll continue back up the rest of this evening and on in tomorrow. I don't know what the earnings reports were, whether it was good or bad, whether they beat or missed anything yet. And there's the timer for that, and right on the money. We'll pause that, get ready for this one. So hopefully, if this has got an initial downward turn, it'll be moving up like Salesforce. But two stocks going to earnings, going the direction we don't want them to go, but that is a part of trading, no biggie. And since we're investors, we're going to be holding on to our Salesforce, and we're going to be holding on to our Hewlett Packard. So whether it's this year or next year, eventually these two companies are massive, they're huge, they more than likely will turn around and we'll get our profits back. But for now, I will watch this a few more seconds. I'll look up to see if HPE, looking on Google here, dividends. And I'll see at what rate they pay. So they have 52 cents per share in dividends. Not great, not bad, but it's better than nothing. It's better than having your money in cash in the bank, that's for damn sure. All right, so I'm going to go ahead and pause the video. For you, I'll be back in just a second. For me, it'll be a few minutes. And we'll take a look at C3AI. All right, we have roughly 20 seconds before C3AI releases their earnings reports. So we can see CRM Salesforce had a turnaround and it's reversed back again into its initial direction down. So that's not a good look for us, not a good outlook that is. And we have roughly 2 seconds left. We'll see if it's right on the money. There's our timer. We're going to stop this, cancel that. All right, so no big initial move yet on C3AI. We certainly have move on Hewlett Packard from its initial turn. It's turned back around, bouncing back and forth. So was this a projection or a conjecture by investors? And then is this the move? Is this all we're going to see for C3AI? Nope. Nope, it's going up. So I currently have 6 shares that we bought at $33.82. So didn't matter either direction. I no longer am as emotional at any point in trading that I used to be when I first started. I used to get a little upset if it didn't go the direction that I wanted it to go. But I learned to become a more level-headed trader, especially since my strategy is for the long term. Ooh, did you see that change? Excuse me. Didn't mean to do that. All right. There we have an immediate change. Thought it was going our direction. Little fake out there for us. And it looks like all 3 stocks that we have initially look like they are going to be going against us. No biggie. Again, we're in it for a long haul. We're not buying and selling every day, trying to make profits that way. Our profits we're looking towards 10 and 20 and 30 years down the road. So we'll take a look at this for just a few more seconds. Here we have Hewlett Packard. Maybe it's going to go in our direction. So I will come back in about an hour for me, but a couple of seconds for you. All right, now that we're finished with those lists, we'll take one last look at the SP 500. Look at that. We had a nice turnaround today. So we started this video, we were in a downward move with a pretty sizable red candle. However, at the end of the day, it came back, and now we finished in the green today at 64.4826. So now let's take a look at our results of our trading activities today. And here we go. Today we have a realized gains of 154.95 cents, although we did lose roughly 30 cents. So that'll be the first time that we actually have some realized losses. These realized losses are not true realized losses. It's just a difference in accounting of which stocks Charles Schwab considers to be sold and which stocks I consider to be sold. So we'll just call it 154.95. Now today we increased our performance over the S&P 500. Today we have to date in this account a 0.88% over the S&P 500, which is 0.12, and combined with the previous account's earnings or growth of 1626, that's a total of 17.14 to the S&P 500 of 10.66, which results in a total of our performance is roughly 6.5% better than the S&P 500 year to date. So I'll go ahead and cancel these out. We'll take a look at what our activities actually were. We sold MasterCard and an ETF UDAO. We set sell orders for Amazon, Goldman Sachs, 3M, and Verizon. And we bought gold and Google. And we are done for the day. Thank you for making it to the end of the video. And if you could, please hit that like, share, and subscribe button so we can reach more people. Thank you very much and have an amazing rest of your Wednesday afternoon.